Today has been a tough day in markets for anyone who's been watching. What are you seeing? What's causing it in your opinion? And where do you think we go from here?
Yeah, today was not a tough day for me. I was
You
short
sure?
coming into.
Oh,
Yeah, I actually it kind of sucked. Last Friday I was like super short, and then we hit this sort of the support level that I was like, well, that's not really good support. And then amazingly, it just like bounced, and in a huge way. I think a lot of people were sort of offsides there, including myself. The price rallied all the way back up to like almost 42K. And then I was like, okay, well, this was the spot that I wanted to get short from. So let's get short again, which is a hard thing to do, actually, after you get sort of beaten up in the market, to stop being gun shy and to actually say, you know what, this is what I wanted to do from the beginning. So let's stick to the plan. So yeah, I saw this big weakness at 42K, and mainly because there's just not a lot going on between where we are now and like the 200-day moving average. And I don't know if this is a good time to bring up this chart and talk about it, because it might be easier for people to understand. That top horizontal line is just where the price sort of paused on this big dip on Thursday, December 2nd, which I actually wrote an article about this because I noticed this on like many exchanges, that we had this big wick down, and it depends. This is back when FTX was was an exchange. You had Binance, you had FTX, Coinbase, and everybody sort of found like a different place for this bottom that day. But it was sort of, for me, a sign that some air was coming out of the market. So when something like that happens, I view that, they say old support becomes new resistance. So I view this as sort of like a key level in the Bitcoin market, because sort of what happened on that day. And I'm using Bitstamp, and the reason I'm using Bitstamp is it goes back a long time and is kind of complete. But don't take this number as being precious, in the sense that on some exchanges it was lower and some it was higher. But it gives you a good sort of barometer of where we at. And you can,
for those listening to the podcast,
we're looking.
The number is 42-ish thousand. Is that the number you're?
Yeah, it's right around 42,000. Let's just call it 42,000. And like I said, that could be 43, 40 even, maybe on some exchanges. There's this sort of really important structure that's formed over like the macro scale. So people that are just listening, this is going from 2019 all the way to the present day, and we're looking at like the daily time frame. So it's a little bit noisy still, but there's some really important things that happen that are key in my mind. And yeah, what I saw was this sort of blow off top here in the short term related to the ETF, and then the loss of this like really key support of 42K. And that doesn't mean that like Bitcoin's going to zero, or even, as some people like to meme, that it's going to 12K. But in my mind, it does now have to prove itself. Like, so if it wants to go higher, now it needs to come back above 42K, close at least, I would love to see like the weekly close above it, at least a few days close above it, before I started to say, okay, this bull market is sort of back on again. This orange line here and this blue line, one is the 50-day moving average and the other is the 200-day moving average. And for the first time since, July 19th, 2019, we're seeing the 200-day moving average rise above the 50-day moving average, which they call a golden cross. And you can see that in 2019, when this happened, even with the COVID pullback, which was a decline from $14,000 to $3,500, this 200-day moving average never went back below the 50 until all the way of fall, or late summer 2020 on August 26th. So this is
2022. This is 2022.
Sorry. Oh my God, I'm sorry. I said the wrong thing. Yeah. 2022. This was a huge bull cycle, right? And there's a lot of people that look at this and they trade the 200-day, 50-day cross. And the way to trade it in 2019 was to start dollar cost averaging into a position, and maybe not just like get super excited and buy today. I mean, when it actually crossed in 2019, I think it was like 250 days or something like that, until 249 days until the price started sort of rising back up again. So it's not like you have to run out and start pressing the buy button today, but I think this is a big feature. And my guess would be, again, that this price sort of comes back down to the low 30s or something like that, fills in this gap here, and then I would be a huge buyer under 30K, and I wouldn't be, if crypto Twitter was trying to freak you out, I would just be buying, and maybe not with any leverage at that point, right?